China is vacuuming up gold all over the world. It's not only the number one producer of gold, but also the number one importer of gold in the world. That's very unusual for a commodity. So yeah, central banks are absolutely grabbing gold. They're right sizing it. They're preparing for some type of new monetary system. And it's probably going to be backed by gold. It's not going to be silver. It's not going to be Bitcoin. It's going to be gold. And so whether we get that in 2026, I don't know. But what that signals to me is I got to get my gold ahead of time and then just wait for them to sort of, hash out the details.
In a recent discussion, Andy Schectman and Alan Hibbard highlighted a significant shift underway in the global financial system, led quietly but decisively by China's accumulation of gold. Unlike typical commodities, China isn't only the largest producer but also the largest importer, effectively drawing in physical supply from every available source. This dual dominance is no coincidence. It's a strategic move to anchor the nation's position in a coming monetary reset. Both analysts agree that central banks are rapidly right-sizing their reserves, positioning gold, not silver or Bitcoin, as the cornerstone of the following financial order. Whether this transformation crystallizes by 2026 or later, the direction is clear. Gold-backed frameworks are making a comeback, and those who prepare early will be ahead of the curve. If you found this analysis helpful, make sure to hit that like button. Share it with fellow investors who follow gold and silver, and subscribe so you don't miss the next big update.
We're seeing, and have been, the central banks front run this gold run for the last 5 or 6 years, and kind of leads me to my next question. We're seeing record physical deliveries on COMEX and shrinking LBMA inventories. To me, that looks more like sovereign accumulation than retail. As someone who's in the retail space, I would tell you I'm almost positive it is. And it seems like these traders certainly know the information. You now have Morgan Stanley moving away from a 60-40 stock bond allocation, as Wall Street has talked about forever, to a 60-20-20. Citing again, they expect sell half your bonds and buy gold. You have Michael Hartnett from Bank of America saying 25, 25, 25, 25. Stock, bond, short-term treasuries, gold. You got Jeffrey Gundlach saying 25% gold is not overweight. There's more and more clues out there from big money that seems to be now rethinking gold, but the money that has been front-running this, the most well-informed traders in the world, seem to have known this was coming. And I guess my question to you is, with all of the record deliveries on COMEX, massive, and the shrinking inventories on the LBMA, you think this is part of a deliberate move to reshore and reprice gold, or even partially back treasuries and restore global trust, as Judy Shelton has told me twice now, once to me and once to Michelle McCory on this show, that on July 4th, 2026, she says, and has publicly been saying all along, that she believes Trump will tie the back end of the treasury market to gold. What that would say to me is, yeah, you can bring back manufacturing with no upfront borrowing costs, where the redeemability is in gold in 20, 30, 50 years. She said they'll even make a 50-year. With the Stablecoin Act running the front end of the market. Do you think gold is being reintegrated into the system here in the States? Possibly. And maybe even across the globe as a settlement system with the BRICS nations. Big question. But really what I'm saying is gold now transitioning into the monetary system by the massive inflows we see coming into the United States, or is it just simply arbitrage and tariff threat?
I think it's more of the former. I definitely think that we're headed towards a new monetary system. You had Secretary Scott Bessent say that, he used to have a fund. People would call him a gold bug. He loves gold, and he thinks that a new Bretton Woods is going to happen in the next 4 years, right? He said this right before Trump was elected, and he wants to be a part of that. So that's a new monetary system. He wants to be a part of it, and he likes gold. You also have Trump saying that, there's something nice about having the dollar backed by gold. Kind of like that idea. So, okay, fine. There's a lot of clues that suggest this. And to your point, Judy Shelton, I don't think she would be saying so confidently that Trump is going to issue gold-backed bonds if she didn't know more about that and if it wasn't being discussed, very, very seriously. So there's always a reason it may not happen, or maybe the timing is off. But I think we can take that as at least a very strong intention by the administration to move in this direction. And to me, that's sort of the key indicator rather than the specific metric it takes or the specific date of launch. So yeah, if we see that, and then if we look globally at central banks, we've seen a sort of right sizing of the gold to GDP ratio of a lot of European nations. And this is over several years. So some nations are actually selling a little bit of gold if they have too much relative to, relative to a certain debt to GDP ratio. Others are accumulating, and so they're sort of lining up. It's kind of amazing. I learned about this through a Zero Hedge article a couple years ago, and it's continuing in that path. Of course, China is vacuuming up gold all over the world. It's not only the number one producer of gold, but also the number one importer of gold in the world. That's very unusual for a commodity. So yeah, central banks are absolutely grabbing gold. They're right sizing it. They're preparing for some type of new monetary system. And it's probably going to be backed by gold. It's not going to be silver. It's not going to be Bitcoin. It's going to be gold. And so whether we get that in 2026, I don't know. But what that signals to me is I got to get my gold ahead of time and then just wait for them to sort of, hash out the details. So pretty simple trade.
I guess we'll just jump right in, and I guess I want to start with the big picture, Alan. A strong dollar makes exports expensive and U.S. labor uncompetitive. And I think if there's any nobility in maybe what Trump is trying to do is to reshore manufacturing. And with policymakers questioning King Dollar, that would have been the knucklehead Jared Bernstein dethroned King Dollar, and White House Vice President Vance writing on White House letterhead that Triffin's dilemma is actually a problem for the U.S. now because of the evisceration and hollowing out of the manufacturing base. And the Genius Act, tying stablecoins to treasuries for synthetic demand for the treasury. My question to you, first question is, do you think the U.S. is quietly tolerating or maybe even engineering a weaker dollar to possibly reshore manufacturing?
Yes. The short answer is yes. I definitely think they're doing that because the incentives are such that they kind of have to. There's really no option. The dollar does need to be weaker, and this is part of Triffin's dilemma. And it also happens, we see it with cryptocurrencies, which is kind of funny. There's that sort of tension about you issue all the coins to the founders, but then if you want anyone to use them, you have to sell them into the market, but that puts downward pressure and downward value on the coin. So there's that constant balancing act. The same thing happens domestically with a fiat currency. And of course, the same thing happens globally when you have the world reserve currency. So that's the Triffin dilemma. So yes, I do think there is a engineered plan to weaken the dollar relative to other fiat currencies. And of course, that means relative to gold and silver. So that's why we see the prices of those metals going up. We do see central banks acquiring gold like never before. And at a certain point, economics turns into an existential crisis for the government of a country. And the United States government is experiencing that right now. The economics on paper can work linearly for a while. And at a certain point, you hit that exponential tipping point. You hit a state change, like when you're boiling water, and the system itself changes. And we're getting very, very close to that right now. It can't go on too much longer. It's definitely an existential threat to have certain kinds of manufacturing inside our own borders. So they're definitely doing that.
Andy Schectman and Alan Hibbard point out that the global gold rush we're witnessing isn't random. It's part of a strategic monetary realignment led by both central banks and sovereign entities. Recorded physical deliveries on COMEX and shrinking LBMA inventories suggest large-scale sovereign accumulation rather than retail demand. The growing chorus from major institutions, including Morgan Stanley, Bank of America, and Gundlach's Double Line, calling for 20 to 25% gold allocation signals a financial elite preparing for a gold-linked system. With voices like Judy Shelton hinting at a possible U.S. reintroduction of gold-backed treasuries by 2026, and nations like China leading global accumulation, the stage is set for a fundamental reset. The world appears to be remonetizing gold, quietly but deliberately. Let's get into the interview.
Regardless how people feel about Bitcoin, my question to you is could it become a tool to recapitalize balance sheets or maybe even help offset the United States debt if companies like Tether are accumulating it through the synthetic demand accumulated through the movement of money on the Genius Act. Look at Bo Hines connected to this system. Could this all be part of recapitalizing or even paying off the 38 trillion in debt and the 175 trillion in unfunded liabilities? I guess is what I'm kind of getting at.
Yeah. Okay. So a lot to unpack there. Let me actually address the gold versus Bitcoin thing first, and then let me turn to like how you use the assets to recapitalize the balance sheet. So I totally agree with you. I think that the gold and Bitcoin communities would be so much stronger if they partnered up. Like, this is a dream of mine. It's like, if I could have one wish in the world, in the short term, I guess it would be for Bitcoiners to welcome the gold bugs and vice versa.
Right.
So I think if I could speak as a Bitcoiner for just a moment, I've held both assets continuously for 10 years. So if I could speak as a Bitcoiner for just a moment, I would say we forget how weird we are. We're so weird. We adopt new technologies. We question everything. Like, we'll ask questions like, what is money, and contemplate it for 10 hours. We do really weird things, and we can't expect the other 99% of the population to get behind this weird technology wrapped in weird layers. It's just not politically viable. It's not palatable to the general public yet. It'll take a couple generations until people are comfortable with this technology and the fact that it could be a money or it could be a store of value. It's just a bridge too far right now. So Bitcoiners would be way better off if they supported a gold standard, an official gold standard in the world, and we actually use sound money. And then they can continue to own Bitcoin on their own if they think it's a superior form of money, it's thermodynamically better than gold. Whatever the argument is, you can continue to own Bitcoin, as I would under those circumstances. Conversely, I think a lot of gold bugs dismiss Bitcoin either because you can't touch it or you can't use it during a power outage, or pick your objection because of how weird it is. And I think a lot of gold bugs refuse to consider the possibility that money could be digital or could be abstract. So I think if we work together, we could get a lot more done. We could end the fiat system, which is the most important thing, and end the systemic theft, end the endless wars, and so forth. So that's kind of the main thing. I wish we could all come together. That's that. And so getting back to your question about how do you use these assets to recapitalize a balance sheet? Could Tether be doing it? Ultimately, the way to keep it simple is to just realize that everything boils down to energy. Everything is energy. Food is energy. Music is energy. Clothing is energy. Our video is energy. Money is energy. It's economic energy, and so forth. So if your energy is leaking out of your life because it's currency, okay? Currency. I work hard to acquire this, and then my energy disappears because someone else can print these out of thin air. If that's the problem, then the solution is to use a form of money that doesn't leak energy. So whether it's gold, silver, Bitcoin, or something else that gets invented, that's fine. And the solution is so easy. You just acquire the thing that's not going to leak energy, and that's it. Everything else is details. So do you leverage this? Do you, whatever? I mean, do you buy treasuries, which are future dollars? Do you, promise to pay an ounce of gold later, and all these sophisticated things? That's all a way of complicating the issue. You just have to hold something that doesn't leak energy. And then at some point in the future, when you want to do something, your balance sheet will be healthy because you have that energy. You have the energy you earned years ago, and you still have it. And this is true if you're an individual, a company, a country like the United States. And so when we think about having 38 trillion in debt, it's because we've leaked our energy all over the place. We've spent money we didn't have. We've leaked energy we didn't earn. And now we owe it. We have this giant energy deficit. And so how do we get out of that? Well, we have to actually earn our way out of it one way or another. And when we earn our way out of it through actual growth, we should be storing it in something that doesn't leak energy, gold, silver, Bitcoin. And when we do that, all of the sudden our balance sheet will be healthy. So that's kind of how I would summarize it. Just use honest money and earn it. That's it.
Alan Hibbard brings a rare middle ground to the gold versus Bitcoin debate, arguing that both camps are ultimately fighting the same enemy, fiat debasement. He believes the world would be stronger if gold advocates and Bitcoiners work together to end the fiat era and restore sound money. In his view, money is stored energy, and today's system leaks that energy through constant printing and debt expansion. Whether it's gold, silver, or Bitcoin, the key is to hold something that retains its value over time. The U.S., with its $38 trillion in debt and massive energy deficit, must eventually anchor itself to tangible, non-inflationary assets. Hibbard suggests that honest money, energy-based, scarce, and incorruptible, is the only path to rebuilding a healthy balance sheet for individuals, corporations, and nations alike. If this gave you value, smash that like button, share it with those paying attention, and subscribe so you don't miss what's coming next. Stay alert, stay prepared, and keep stacking tangible assets.